What's up, guys? My name is Nick. I'm the founder of Options Flippers, and today I'm going to be posting my first video going over a little bit of an overview as to what I intend to post on this channel, some tips and tricks that I've found that are really helpful when finding valuable options contracts, and a little bit more as to what I think is going on in the current market and some of the positions I'm going to be looking at this coming week, and also positions that I'm currently involved in right now. That being said, I'm not a financial advisor. This is not financial advice. This is just my opinion, and take it as you will. But I wanted to, get this channel going and kind of grow the community. So, without further ado, let's go ahead and share my screen and get right into it. To kick things off, let's just start off with how to find positions that are good for options trading. So if you head over here to TradingView, this is a free service. It's super helpful. You can use hundreds of indicators, whichever ones you want. And kind of what you want to do is familiarize yourself with the software and pick your setup. What I use, you can see over here, I use the exponential moving average 9 days, and I use the DEMA 9, which is the demand exponential moving average 9. The number is just the number of days. And then I also use the RSI, and occasionally I swap out the RSI for the MACD. Sorry about that message, guys. So what you're looking at here right now, here's plug power. I'm sure many of you guys are familiar with plug. They've been killing it in the renewable energy sector and hydrogen. But lately you can see here, mind you, this is on the day view. So each one of these candlesticks represents 1 day. But you guys can see pretty clearly here that there's been a really bullish volume going into their earnings. And they gapped up here quite a bit from about $34-ish all the way up to 73. Now, whenever you see this formation, it's pretty apparent that there's gonna be a sell-off in the future. It may sometimes kind of stabilize for a few days, but more often than not, people will take profits and sell out of the stock. Another thing is that you should know is the E here. This is their earnings for Q4, which was the last period of 2020. You may be a little confused because they actually crushed their earnings by 50%, but yet still we see here a very decent sell-off. They went from about 70-ish, 68-ish, all the way down to 37, which is pretty much where they gapped up from in the first place. So this, in my opinion, is a really good time to buy some maybe 10-15% out of the money calls on plug. Personally, I like buying out of the money, slightly out of the money, about 10%, just because I've found that these contracts, they don't necessarily make you more money, but they can make you more money with less money, if that makes sense. So you can buy cheaper contracts and more of them, and if you're correct, you can really kill it. And that's just a personal preference. If you want, you could buy like $49 calls, $50 calls, but you may end up with one. And you'll figure out when you're dealing with options that having numerous contracts is very helpful. One, for scaling into positions, and two, for scaling out of positions. So for example, if you want to buy one contract, let's say on a $50 call for plug, and let's say you wanted to do it, you wanted to play it safe, you wanted to do March 19th, okay? What you're looking at right now is $428 per contract, okay? That's one contract. Now, if you wanted to buy on the same period, giving yourself still a couple weeks here, I mean it's February 28th right now, you could give yourself, let's see, $48, call it 10%, so that's $475. Half of that is about what, like $285. So call it like $7.50. So if you want to go $7.50 up, that'd be about like $54 or so. Sorry guys, I mean I'm doing all this in my head, but whatever. Let's just call it 55. So if you go up to 55, you're looking at $275. Still pretty pricey, but definitely not as bad as the 428. So you could buy two in this case for almost the same money. And if you took it further, if you did about 20% out of the money, call it $9 would be 56. Anywhere up in here, these contracts are going to react pretty well. And you can see, these contracts, especially because we're a little bit late to the game, plug did move up about 9% or $5. So you can see that yesterday, or not yesterday, but Thursday, they were 131 each, and now we're looking at 230. Technically, people are willing to pay 221, but either way, these contracts have definitely gained some value, and I think there's a lot more value to be had. Let's see, I'm getting a little off track here. Sorry, guys. Yeah, so back to technical analysis and kind of what I usually look at. So right now we're looking at the blue line, which represents the demand exponential moving average over a 9-day period. And the orange is the exponential moving average in general over the 9-day period. Okay, and with this setup, pretty much anytime that DEMA surpasses the EMA, it's in a temporary uptrend. As you can see, blue line is up here, orange line is down there. To put it very simply, it's an uptrend. Okay, usually where you want to put your money is right where they cross. Now, I do this on a much more micro level, so I combine both macro and microeconomics. So I can see that in the long term that this is due for a correction and will probably bounce back up to the $70 region in the next month or so. That being said, what you want to do is go down to about the 5-minute window, or even the hour, if you want. And you can see, and this is what I'm talking about, right where the EMA is crossed. So like I said, we're a little bit late to the game. This is where they crossed. Okay, where the DEMA has taken control over the EMA, this is the beginning of a new uptrend. And you can see that these will last for a while sometimes. Like, look how long this downtrend lasted. Long time, February 9th all the way to February 18th. So you can see here, it's all about timing. It's all about timing. You don't want to be that guy who buys in right here because you think it's about to be an uptrend because you see the cross, and then get absolutely annihilated by this downtrend. I mean, at this, depending on your contracts, they pretty much expire worthless if they're calls. So you want to definitely make sure that you keep a bird's eye view of all the content you're looking at. Make sure it makes sense on numerous different time intervals. Like, is it a downtrend on the 5-minute, the 1 hour, and the 1-day period? Or is it just a downtrend in the 1 minute or 5 minute, but overall still an uptrend in the week period or the day period? This is all relevant to what contracts you pick and whether or not you're actually improving your likelihood to make money. So that's a little bit on what I see going on with plug. I really feel like this is a good opportunity to get into plug. It looks like we have a little bit of a short-term pullback coming into the post market. We'll see. I think that plug is gonna pop Monday, given the stimulus bill and so on being passed. But yeah, so let's look at some of the other positions. Palantir is a company I'm currently invested in. In the day period, they're getting pretty weak on the RSI. Oh yeah, I may have forgot to mention the RSI is really just an overall indicator as to how overbought or oversold something may be. So for example, you can see right here, the RSI is at about 81. I have it set to 70 and excuse me, to 70 and 30, which is a little conservative, but you can see here RSI is up to an 86, which is pretty high, aka overbought. And then what do you know? In the next couple days, it corrected itself, dropped all the way down to 20. So that's a pretty big indicator right here. And then it works both ways. You can see, it's getting a little low. It's not too low, but it's a little bit low. And you can see right here, we got a sledgehammer forming, which is usually indicative of an, bullish volume, aggressive volume going upwards. We can take a look at the 5-minute chart, and this is what I'm talking about, guys. Be ahead of the game. Try and find uptrends before they happen, and then put your money where your data is. So right here we can see a little bit, don't really pay too much attention to the post market. I mean, it's important, but it's really hard to gauge what's actually going on. You can see right here though, we're in the hour view, pretty big downtrend. We came all the way down from, well, technically, yeah, I mean, all the way down from 30 bucks And we can see here we're starting to consolidate and move laterally, which is usually meaning we're probably going to recover some value pretty soon here. Plus, we got this huge bullish candle, a lot of buying volume. So yeah, I feel like this video may be getting a little bit too long, and I don't know how long YouTube is going to let me upload for my first video. But let me just quickly show you one other resource, and then we can talk in the comments about other things you guys want to see. I can provide you guys with a lot of proof and results from this past week. Workhorse specifically, I made about $3,400 on Workhorse across Ameritrade and Robinhood, and I invested a little bit less than $600. So that was a really solid return, actually almost one of my best trades. So if you guys want to get into results videos and things like that, I can definitely do that as well. But one quick thing that I wanted to show you guys is hop over to this website called Bar Chart. And what you can do is you can find, if you sort this by the open interest, you can find positions that may not be well known just yet. So for example, like open interest is a measurement of how many contracts are being held, not traded. There's a difference. Volume is contracts that have been sold or bought. Open interest are contracts that are being held within somebody's brokerage account. Okay, so what you want to try and find are really high open interest positions with not that much volume, unless it's the same day. This can occur sometimes, but for example, a couple days ago I found some contracts on Ford that had about 94,000 open interest and about 10,000 volume. So if you can get a good open interest to volume ratio, that's usually a pretty good sign that some people may know something that we don't. I'm not saying only gauge your contracts off open interest, of course not. I'm just saying it is another one of the numerous factors that can help you gain an insight as to what may be occurring. So that being said, guys, please go ahead and drop some comments as to things you guys want me to talk about. I do apologize if this video was a little all over the place, wishy-washy, but I do want to try and really give you guys some solid content and not waste anybody's time. So that being said, yeah, this week I've got my eyes on Palantir, Workhorse for sure, maybe Ford, and definitely Plug, as I talked about in this video. I'll show you Workhorse real quick. Workhorse is another company that that you can see just from what we've gone over together so far. You can see RSI, just like we said, when it gets too high, it corrects itself. When it gets too low, it corrects itself, to put it simply. This is usually an indication of being oversold, which means that it is not fairly valued, and overbought, not fairly valued, so it'll correct itself. Mind you, Workhorse, they got absolutely annihilated at the due to the news of them not obtaining a USPS EV production contract for their fully electric vans, and there was a huge sell-off. They hovered around I believe about $28 that day, and then they got wrecked at about 3 p.m. and went all the way down to about $12. Yeah, so they have since rebounded a little bit. They're back up to 16, but I think that there is still very much room for them to go up again, especially if you hop into like the 5-minute window. We can see that they have started making a comeback, and there has been some really bullish buying volume. We actually loaded up on contracts, which I wish I had been making videos before, but we loaded up on contracts around the $14.80 level, and then when that absolutely massive spike came in on Friday, it launched Workhorse. It's not even, oh, this is 5 minutes. It absolutely, or Thursday, excuse me, it launched Workhorse up to about $19.60, almost $20, and we were able to dump our contracts for ridiculous profits, simply because I knew that the implied volatility was off the absolute charts. It was like 350%, and last time I saw levels like that was GameStop, so I cashed in while I could. It got absolutely annihilated in the post market, and it looks like it was the right choice, because now it's back down to 16 bucks, and I'm definitely planning to flip that profit again. So that being said, thank you guys for watching, and I'm going to definitely be posting more content. Please like, comment, subscribe, and let me know what you guys want to see next. Thanks, guys. Peace.